Refinancing saves you 58 grand over the life of the loan. Oil prices have increased, the risk inflation stays above target. The March hike was not unanimous. 5 members voted to hike, 4 members voted to hold. This is a 16 percentage point spread. Anyone telling you they know exactly what happens is lying. 0.8% quarterly inflation. That is the number that decides Tuesday. On Tuesday afternoon, the Reserve Bank will meet. Everyone is watching for the cash rate decision, but the number that decides it came out 2 days ago. It was a 0.8%. What it means? 0.8%, that is quarterly inflation. The exact measure the Reserve Bank watches. Annualized, that is a 3.2% run rate. The target band is 2 to 3%. Inflation is back above target, and the bank now has cover to hike again. If you live in Melbourne, or you own a property in Melbourne, or you are about to buy a property in Melbourne, this video is for you. I'm going to walk you through 3 things. 1, the data the RBA just got. 2, exactly what they will do on Tuesday. 3, the dollar impact in your council the day it hits. And there is a global trigger you need to know about. A war on the other side of the world is what put the inflation number above target. A shipping lane called the Strait of Hormuz pushed petrol up 32% in a single month. That fuel cost flowed straight into your March CPI. Now, the Reserve Bank has a choice. And on Tuesday, we find out what they will decide. Before I show you what happens to your suburb, 2 quick things. 1, hit subscribe and turn on the bell icon. I am going live on Tuesday at 2:30 AEST, the moment the decision drops, and I'm back same day with the breakdown. 2, go to nexthouse.com.au to get the reports. I've built the Melbourne LGA repayment calculator, all 32 councils, pre-hike repayment, post-hike repayment. It is free, no email needed. Use it before you sign anything. Use it before Tuesday. Let me show you exactly where we are. In November 2023, the cash rate hit 4.35%. In 2025, the bank cut 3 times, down to 3.60. Then everything turned. Iran, Israel, Hormuz, petrol prices went up, inflation back up. February, they hiked again. March, they hiked again. We are now at 4.10. And here is what most analysts are missing. The March hike was not unanimous. 5 members voted to hike, 4 members voted to hold. 1 vote, that is how close we got. Same 9 people, same table, sitting down on Tuesday, looking at the same inflation number I just showed you. So here is what every major bank is now saying. Westpac, the chief economist is Lucy Ellis. She used to work at RBA. She said, quote, the May hike is locked in, end quote. ANZ, same call, 4.35% peak. CBA, same call. NAB, same call. AMP, 60% hike, 40% hold. Markets are pricing about a 70% chance because the consensus is high, but the 30% that is real. I will come back to it. Now let us get into specifics. Melbourne, all dwellings, median value, $828,000. Houses only $980,000. That is the headline number. And here is the part that should make you uncomfortable. Melbourne house prices are still below their 2022 peak. 4 years later, we are still down 1.3%. Sydney is in the same boat, but Brisbane, Adelaide, Perth, they are all hitting new highs. Melbourne never recovered, and we are heading into Tuesday already in early downturn. Down 0.6% in Q1. A hike on top of this is a fuel on fire that is already burning. Before we get to the council, by council numbers, here's a simple math. Per 100 grand of mortgage, 30-year P&I, pre-cycle at 5.9%, $590,000 a month. Today at 6.65, 642. After Tuesday, 658. If Westpac is right, we will hit 4.85, 691. A 700 grand loan, that is an extra $343 a month, every month, until the next cut. So we built this, nobody else has it. Methodology is in the description. I took the median dwelling value of every Melbourne council, all 32 of them, 80% loan to value, 30-year principal and interest, and I worked out the difference what you pay today versus what you pay if they hike on Tuesday. Here is what came out. At the top, Boroondara, median dwelling value 2.18 million. Annual cost increase $3,452. Bayside, $3,089. Stonington, $2,883. Manningham, Boroondara, Yarra, $2,000 to $2,500 a year. These are the suburbs where the dollar pain is the biggest, but the percentage hit is the same everywhere. Now, find your council. I will walk through them all. Inner East, Boroondara, Bayside, Stonnington, Glenira, Manningham, you are looking at $2,000 to $3,500 a year. Inner West, Melbourne, Hobsons Bay, about $1,500 a year. North, Yarra, Darabin, Merriback, Banyul, Munib Valley, $1,600 to $2,000. East, Whitehorse, Monash, Maroondah, Knox, $1,500 to $2,100. Southeast, Kingston, Mornington, Peninsula, Gardenia, Casey, Frankston, $1,300 to $1,700. Outer North and West, Hume, Battersea, Brimbank, Wyndham, Melton, $900 to $1,200. No matter where you are in Melbourne, your monthly cost goes up between $77 and $288. If and when they hike on Tuesday, drop your council in the comments, just the council name, nothing else. I will read and I will comment or reply back on it. I read every of them. Now, there's a bigger question and I want to address it now. There are two parts on Tuesday. Let us walk both. One, they hike. Cash rate moves from 4.10 to 4.35. Variable rates go from 6.65 to 6.90. It is only on repayment within a week. Path 2, they hold. Cash rate stays at 4.10. I have to be honest about both. Why I think they hiked. 1, trimmed mean inflation at 3.3% above target. 2, services inflation persistent. 3, oil shock pushing fuel up. 4, unemployment still at 4.3. 5, GDP at 2.6 fastest in 3 years. And the RBA itself said in March, quote, oil prices have increased, the risk inflation stays above target for a prolonged period, end quote. When the central bank uses the words, quote, prolonged period, end quote, they are telling you what they are about to do. The hold case, the contrarian view, 4 members already wanted to hold in March. Affordability has hit a wall. Totality says serviceability is now tested at 9%. Consumer confidence is near a record level. Trump tariffs are dragging on global growth. A hold is defensible. It is why markets are only at 70% on the high. But here's the thing, even if the hold is on Tuesday, it is a pause, not a turn. Westpac says hike in May, June and August. A hold today buys you 8 weeks, not 8 months. Now, before I tell you what to do, let me show you what is already happening. Melbourne auction clearance, the share of homes that sell at auction hit 54%, the weakest reading since July 2022. A year ago, the same week was 67. Listings are 12% above the 5-year average. The market is already cooling. Tuesday accelerates it. And here is what most honest thing I can show you. Forecast for Melbourne in 2026 are all over the place. KPMG said plus 6.8% back in January. ANZ last month said minus 1.7. SQM's base case minus 2.5. SQM's bear case minus 4 to minus 9. This is a 16 percentage point spread. Anyone telling you they know exactly what happens is lying. What I can tell you is this. The higher the rate goes, the more skewed the downside Melbourne becomes. So here is what to do. 1. If you have a mortgage, call your mortgage broker on Monday. Lowest variable rates are 5.35. Average is 6.65. On a 500 grand loan, refinancing saves you 58 grand over the life of the loan. 2. If you are a first-home buyer, your borrowing capacity is 6 to 8% lower than last year. Talk to your broker on real number, not the headline you got 6 months ago. 3. If you are an investor on a 700 grand loan at 6.90, the median Melbourne house investor is losing 15 to 25,000 a year before tax. Run your numbers. 4. If you're selling, 54% clearance is the message. Realistic pricing wins, holding out does not. Now here's a recap. 3 things to remember. 1. 0.8% quarterly inflation. That is the number that decides Tuesday. 2. Melbourne house median is 982,000. We are still below the 22 peak. A hike accelerates the downside. 3. Your council repayment rises are between $77 and $288 a month. The report at nexthouse.com.au, where you can see the exact numbers. And now the most important thing. Tuesday at 2:30 AEST, I'm going live the exact moment the decision drops. Whether they hike or hold, I will break it down in real numbers, what it means for Melbourne or for your suburb or for your repayment. Subscribe, press on the bell icon and set a reminder. Do not miss it. Drop your counsel in the comments. I will reply with your repayment number. And one more thing. If you are wondering, are Melbourne's growth corridors Wyndham, KC, Whittlesea still a buy at these rates? This is a Wednesday's video. Every outer growth council, price, yield, buy, wait, avoid. Subscribes and do not miss it. And a quick note before I go, nothing in this video is a financial advice. I'm not your broker, I'm not your accountant. I'm an independent property analyst. I work with data, I show you what I see. Always speak to your licensed advisor before decide anything. See you on Tuesday at 2:30.